Good morning again. This is Brad Matheny. Today's the 14th of April. Excuse me. This is the second attempt at this video. For some reason, TradingView didn't like the upload process or kind of got hung. I'm going to try it again. So what we're looking at here, guys, is the same setup I talked to you guys about last week. We're rolling into this up, down, up pattern into early stage accumulation, moving into the base rally tomorrow. Then we get this bearish exhaustion, which indicates we might see some selling on Thursday into maybe a basing bottoming pattern on Friday. Really, where we're at, guys, is we are in this deep low, ultimate low bounce pattern, which is setting up this upward flagging formation. I've tried to draw it in dark red here of an inverted excess phase peak pattern. We're going to stay trapped within this consolidation range, and we're likely going to roll upward 3, 4, 5, 6 trading days, maybe a bit longer, into the 22nd, 23rd, 24th, and then we're going to start to roll downward into my May low. We're going to be staying within this consolidation range quite considerably, in my opinion, over the next 3, 4 months. So we are going to move down into a lower low in that July low. It's actually more over here in early mid-July. But we are going to be trading within this range, in my opinion, in this downward channel for the next 2, 3 months. And we're going to probably see volatility diminish back down into normal levels, not these 8, 10, 12% days. So get ready. We're going to be struggling to break out of this range literally for the next 2 or 3 months until June, July. And then I think we're going to see this deep low in July and then rally back out and then a deep low in October. Now, QQQ, and I'm going a lot faster now because I'm not going to try to redo the entire video after it lost it. I've got to rip this one out. Same setup. We're looking at the same basic setup in the QQQ. Probably going to rally up to this 478, 483 area, roll back down into the May low, and then consolidate further as we move out into the July low. Ultimately, guys, this is setting up into kind of a broad cycle phase, kind of like this, and maybe a bit like this. So be aware that, we're in this downward cycle trend, moving across this consolidation pattern. You're still going to have a lot of volatility in here, moving around and giving you opportunity for swing trading and day trading. But again, these, 8, 10, 12% days, these are going to go away. And they're going to go away very quickly. We're going to move back into the 2, 2.5, maybe 3% days, maybe a lot smaller. But we're going to move back into more normal volatility as we consolidate over here into this May, June consolidation rate. So we're basically, I'll be honest with you, come where we're at right now, call it 455. If by June 16th, we're at 440 and have seen a fairly narrow range, meaning we've gone literally from here to here in 2.5, 3 months. I would not be surprised. We're going to be doing a lot of sideways rotation over the next 2 or 3 months. Okay, gold and silver. I highlighted this, that I think the 3,300 level over here is really critically important. And again, I think the 33 level here is critically important. And what I'm going to tell you is that these 3,300 and 33 level over here on the silver are psychological numbers, big psychological numbers, not only to me, but to a lot of other people. And why? Because the threes represent a very powerful number. 33 represents a very powerful number. 33 would obviously be even more powerful, although maybe not, because it's 4 threes. And if you understand the Japanese candlestick theory, you'll understand what I'm talking about. But again, long and short of it, I think this 3,300 level is a very big number. 33 over here in silver. I think once we get above 33 in silver, silver's going to rip. Same thing with gold, above 3,300. Gold is going to rip higher. I think we're going to run into some consolidation over here, trying to get above it. But again, this number to me is very important. I think, I mean, we'll see how it plays out once it gets above 3,300. But gold is moving up into a rally pattern today, then a blank pattern, then a counter trend inside breakaway, which would likely be a downward move, then a momentum rally on Thursday, then a pause, basically nothing day. Then we get a momentum rally in counter trend mode, which would technically be to the downside on Monday, the 21st. Then a breakaway on breakdown, on the 23rd, and a Harami inside, and then an inside breakaway in trend. We're obviously in bullish trending in metals. So we're going to see what happens here. But what this is suggesting is the next week and a half kind of looks like this. A little bit of sideways volatility in gold over the next couple of weeks. Nothing, maybe a rally this week a bit up into 3350, 3400, but we're going to see some consolidation, some rotation next week. So I would be looking for the same type of rally here, maybe into something like that. Okay, lastly, we'll come over here to Bitcoin. This is my main Bitcoin chart. Bitcoin has moved into the apex volatility range. You can see here we've got this downward flagging formation across this horizontal line here. So we're basically moving from this downward move to A, B, C, D, and then eventually E should break down towards this 63, 60, 5,300,000 area. So either here or here, but we're getting into apex volatility up here, which is going to set up kind of a bull trap. So be aware that Bitcoin could move up into the 87, 88, maybe all the way up to an 89,000 area before rolling sharply back to the downside. And that's probably going to come around April 24th, 25th, 26th as the rest of the market starts to move downward. This is very common. Apex volatility happens near the apex of a flagging formation, and it's technically going to set up a bull trap. It'll rally up, get everybody thinking Bitcoin is finally broken out to the upside, and then it'll roll back down to the downside. So we'll see how it plays out. Okay, made this one very short compared to the last one. Wow, yeah, almost half the last one. So come back over here to the SPY. Again, we're looking at lower volatility, within reason. We're still in a huge volatile range. Okay, so when I say lower volatility in the price range, I'm talking, 2, 3, 4, maybe 1, 2, 3, 4% type of moves. That's still huge. Okay, compared to normal volatility at a half or 3/4%. But again, nothing like this, 8, 10, 12% swings. This is massive. Think about normal trading. If you think of it like a cup of coffee at about a 0.5% to 3/4% move in the SPY, think of that as your normal cup of coffee. Okay. And then think of something like a 3% or 2.5 to 3.5% move as instead of a normal cup of coffee, it is a bucket of coffee. Yeah, it's much bigger. Okay. When you get up to 4, 5, 6% moves, now you're talking more like a wheelbarrow of coffee, a big amount of coffee. When you get into this area where you're talking 8, 10, 12% swings, this is more like a dump truck full of coffee. And so there's a big difference between a cup and a dump truck. And that's where we're at right now. This is a huge amount of volatility. And I expect we're going to get back down into the bucket load from the dump truck mode, meaning we're going to see volatility consolidate quite a bit over the next 30, 60 days into something more negligible, maybe in the 2, 3, 4, 5% type swings. Until we settle this big tariff issue and news and whatever comes out of the Trump administration, volatility is going to stay elevated. Okay, guys, that's it for now. Hopefully this video works. I will talk to you guys later, and be sure to get some today. Remember, we're going to be moving up for 4, 5, 6, 7 days, and then we should roll down for about 2 weeks, 3 weeks. Okay, guys, talk to you later.